It's no secret I'm something of a perma bear. I haven't been very optimistic about the economy for a couple of years now, but my guest today takes that to a whole new level. I am very proud to welcome the last bear standing to the channel today. I first discovered Bear on Twitter last fall when I was doing research on the collapse of China Evergrande and the Chinese housing market. And I referenced a lot of his work in some of my earlier videos on the subject. He was way ahead of the pack in predicting the collapse of the Chinese housing market, and he was one of the first ones to predict that this would spread to China's banking system, which we're starting to see today. I've got links down in the description below to his Substack and his Twitter feed. I highly recommend both of those. And without any further ado, here is part one of my three-part interview series with the last bear standing. Bear, how you doing today?
I'm doing good. Thanks for having me.
Thank you for coming. I've been trying to get Bear on the channel really since as early as October of last year. Your work has been fantastic. Starting with the Evergrande story is when I first found your feed on Twitter, and then from there I found your Substack, and it's one of those hidden gems. I don't know how hidden it is. You have a pretty big following now, but it's at the time it was one of those hidden gems of FinTwit because your work on the Evergrande collapse was fantastic, and I referenced it a lot in some of my earlier videos last fall. And I noticed a couple of things, a couple of themes that you had been repeating over and over again in some of your research back then. We're starting to see that play out now. So I figured I'd reach out to you again to talk about that. And in particular, I noticed you first kind of started to sniff out trouble in China with the failure of the Huarong capital management situation. And I noticed in one of your earlier Substack articles, you referred to it as the garbage disposal of bad debt in China. Could you elaborate a little bit about what Huarong was and why that made you think there may be some more systemic problems going on there?
Yeah, sure. So Huarong is one of four of the big AMCs, is what they're called, asset management companies. But basically, they were banks that were set up in response to the Asian financial crisis of the late '90s to sort of deal with the problem of the bad debt that had accumulated at that point. And since then, they have continued in that service, basically buying bad loans or bad debts off of normal banks, and they are supposed to sort of be restructuring or work through those loans, sort of deal with the problems of bad debt across the banking sector. So that's kind of how bad debts get resolved, is that normal banks sell them to these AMCs, and the AMCs sort of work through them in sort of a restructuring manner. However, more recently, those banks have expanded their what they do to be sort of all inclusive, and basically are not too much different from a normal bank. They provide capital market services. They expanded into all different kinds of investments, risky investments. But ideally, they're supposed to sort of rid the banking system of their bad debts.
So this asset management company that was set up by the state, correct? This was a
Yes.
state-backed institution.
Yes.
Their job was to kind of handle the bad debt from the economy, and yet they started to create bad debt themselves through bad investments or what have you. And you had a pretty good quote in that article. You said, "When the cleanup crew makes a mess, who do you call?"
Yeah.
And that was quite telling.
Yeah, and I think it's beyond, just I think that in the case of Huarong, they absolutely had bad investments of their own. But I think it's also speaks to basically the fact that you had bad debt accumulating throughout the entire banking system for a long time that just never really got dealt with. And a lot of the ways in which these problems were dealt with were sort of accounting gimmicks and whatnot that basically moved them off the books of of banks, but also of the actual AMCs themselves, where they present the image of being, in good position, but in reality, these bad debts have never really been sort of worked through in a healthy way, and so they've kind of been accumulating for some time. And so it's a combination of both these banks, expanding their reach beyond, into poor investments themselves, as well as sort of a decade-long buildup of bad debt in the Chinese banking system.
Now, speaking of the Chinese banking system, in one of your more recent articles called "The Gray Rhino," it was your first in a two-part series about the China housing collapse. You mentioned some things about bank debts and GDP, I'm going to read you a couple of the stats from that article. You had from 2008 to 2017, China's GDP roughly tripled, which is phenomenal growth, but the debt grew far faster than even the GDP grew. And at that point, I think this was as of 2017, half of all global bank debt was in China. That's incredible. I mean, if you think about all the bank debt here in the United States, all the bank debt in Europe, I mean, European banks are grotesquely over leveraged, but half of all the debt in the world, all the bank debt in the world was in mainland China. And it was to the tune of, in 2017, $38.4 trillion US. And you contrasted that with the US, which you could argue the US is in a debt bubble itself, 16.2 trillion in bank debt. So debt is only productive if you take that debt and you put it into investments that generate a return that's sufficient to service that debt or to pay back that debt. And it seems like what you're getting at with these statistics is that China has not wisely invested this debt. They've built this massive behemoth of infrastructure, but these were low return investments, and now they're not generating enough of a return to handle the debt that was created. Am I understanding this correctly?
Yeah, and it really does go back to 2007 or 2008, really. In response to the global financial crisis, China did somewhat, in some ways, similar to what the U.S. has done in sort of the past 2 years or so, in which they were basically turned on the money printer, so to speak, and rapidly expanded their sort of fiscal and monetary policy in order to counteract the global recession that was happening at the time. And so that was based, and the way that they did it, as you mentioned, was through infrastructure spending, which was all sort of related to housing in some way or another. And so the way that China was able to obtain the growth that they were able to have was sort of by back solving how do we get to 5% growth or whatever the target was for the coming year. So you say, okay, we'll build 5%, however many roads or however many whatever it takes to get to a 5% growth target, and the money's going to be there because that was sort of the policy decision at the time. But as you said, over time, you end up with the situation where you have a ton of roads and you'd have a ton of houses, but those aren't productive investments, and they aren't actually benefiting the economy. And at the same time, when these assets are valued higher than what they should be, in the case of housing, you have a situation where you have a wealth effect that is not in line with the actual sort of productive assets of the economy. So people on paper feel very wealthy. Banks on paper can say that their loans are good, but when it actually comes, push comes to shove, as it has now in the housing market, and we're trying to figure out, where all this paper value went to, it was never really there in the first place. It was all sort of an illusion based on the policy of, constructing assets that weren't productive to meet top line growth targets, and never really accounting for the losses that should be incurred with sort of bad investment.
Yeah, the term speculative bubble just doesn't quite seem to cover it, right? We've seen speculative bubbles before. We've seen the tulip mania. We've seen NFTs, real estate here in the States in 2008. But I think these historical comparisons, they don't seem to quite convey the severity of just how big this problem in China really is. I mean, have we ever seen anything this big, a bubble this overinflated before?
I mean, I think it's got to be up there if it's not the biggest, but that actually is. I mean, I don't. My interest in the subject is because of how big it is and how important it is to the Chinese economy. I don't have. It's not what I do for my profession. I don't really have background in it outside of doing research in it over the past couple of years. But the reason why it stood out, as opposed to, you could say that there's housing bubbles in a lot of places, but the reason why the Chinese one stood out so dramatically, as opposed to, let's say, Toronto or whatever other global market you want to say is in some sort of housing bubble, is because of how important housing is to the Chinese economy. And it really is. I mean, it stores something like 80% of the total wealth of the Chinese people. So they don't have an equity market and debt markets in the way that we have, where you can go out and invest in stocks and bonds, and so much of the wealth that people have is tied up in real estate, and that's been a great investment for the past 20 years since private ownership of real estate has started back around 2000. So you've had this process where property has gone up for 20 years. It is the way in which, it's kind of this state sanctioned growth model is through property. And so a lot of citizens and, people expect that housing could not go down because it's effectively state sanctioned and the state won't allow it to go down. But now we're in the situation where, that there were ghost cities that, for a long time, people have talked about ghost cities. And for a while, there was a real story around, the urbanization of China, and that these growth cities actually were, filling up over time. And there were success stories, but those are, cities that were built in like the mid 2000s that have kind of filled out. Now you've had that same model continue to play out for, the following 10 years. And it gets to the point where, you have a huge amount of excess of housing supply. There's not any real sort of underlying demand for, in terms of living space for this. It's all a speculative place to put your money, or a place to hold your wealth, which is why if you have a correction in that bubble, it can be devastating to the economy. It can be devastating to people's individual wealth. It can be devastating to the financial system. And so that is why when things started to sort of go south, I became really focused on it. It is because it is unique in its role in the Chinese economy. And obviously, given that China is the second largest economy in the world, it's very important to the global economy.
Yeah, if you compare it to say here in the States, the average say middle class or upper middle class here in the States, it's pretty evenly split between the stock market, the bond market, and housing. Right? You probably have a pension or an IRA or 401k that's likely in some kind of a 60-40 portfolio, right? So you're pretty evenly split stocks and bonds there. And then you've got equity in your home. And it probably, give or take, is about one third allocated to each major sector there. But in China, you don't really have that. The average Chinese or middle class Chinese, it's all in real estate. The Chinese stock market has never really recovered from 2008. The Chinese bond market, the average Chinese investor doesn't go near it. It's all of the wealth of the average Chinese citizen is tied up in housing, and it's that is the definition of a speculative bubble when people just throw their money in there because number go up, not because they need to live there, not because there's going to rent it out to somebody. These places are just sitting empty.
Yeah, and I think one of the stats that really that really struck home with me was, and I forget the number offhand, but the number of mortgages. This is going back. This isn't even current, but I think it was 2017 or 18. The number of mortgage originations that were for first properties versus second properties versus third properties versus fourth properties, and the number of mortgage originations for actual first home buyers was, I don't remember the number, but it was like 10%, some very incredibly small number. The number for second home, third homes, fourth homes was a vast majority of the mortgages. So it just spoke to, and obviously given the demographic situation in China too, it's not like they have some booming, a booming demographics where there's a need for, that they're going to be able to grow into this housing anymore. And it really just, to me, that was, I know that there was excess in the US housing market in the mid 2000s, but I'm not sure that it was ever to that degree.
Yeah, I mean, we have something like 90% home ownership in China already. So 9 out of
Yeah.
10 Chinese already owns their home, and yet 80 to 90% of all home sales are for second and third homes. So almost the entirety of the housing market. If there's only 10% of the population that doesn't own, that means all these homes that are being built and bought and sold, there's nobody to live in them. So they're not income properties. They're liabilities. They're speculative liabilities. I mean, it's really again, bubble just doesn't seem to cover it. So there you have it, folks. The situation in China's real estate market, it's really a lot worse than even some of the mainstream media articles have put out there. We've never really seen a speculative bubble this big. Even the US housing bubble in 2008 just pales in comparison to the size of the bubble in China and the percentage of total wealth of the Chinese citizen that makes up that bubble. And I've got links down in the description below, both to Last Bear Standing Substack and to his Twitter feed. I highly recommend both. The Last Bear Standing is one of just a handful of people who every time I see him come up on my Twitter feed, I stop and I read what he has to say. I can count on one hand the number of people I can say that about, and I'm hoping to get every single one of them on this channel at some point. And no, I'm not going to tell you who the other ones are. You'll just have to wait and see. This is just part one of my 3-part interview series with the Last Bear Standing. Look for part 2 over the next couple of days where we get into the next stage of this contagion, China's banking system. Till next time, live small and dream big.